GM. GM. Daily levels. Today is Friday, the 26th of April. And let's look at the market. So, let's keep it really simple. Bitcoin had a market structure break on the daily chart back here. This was the highest daily close, the interim high, right before the lowest low, push down. Price bounced back up. Wick down on the Friday, broke back up again, didn't close, and then Saturday close, Sunday, Monday, Tuesday, Wednesday, Thursday, and we're on Friday. So almost a full week of closes above that. We're now right back at that line. So that market structure break line is a good level to watch. Zoom in onto the low time frames, and here we have it. There's the MSB level. We've held it really nicely. Now, looking at this, just eyeballing it, I don't think we go like that. I think there's probably more consolidation needed. And we might see this get tested again. And then if it flips those bands back to green, I think we're all systems go on BTC. I think if the 4-hour bands can flip green again, I think BTC is going to head for the highs. And then from there, it might reject, back down, or it might continue up higher. Here's one of the things you need to be aware of and ready for. Everything's bearish. So Bitcoin's probably going to go up, right? Because in ranges and in consolidation, it's really a psychological thing. So we've had easily the worst day for ETFs. Not because Grayscale, right? This isn't the most that Grayscale have sold, but this is a 217 million outflow day with everyone selling except BlackRock, but they didn't buy any, right? And a couple others. This is bad. It's bad. This is the thing that we said should not happen. The new ETFs should not start dumping. The last one left is BlackRock. They have not had a single outflow. As you can see there on the minimum. Right? BlackRock have not had a single outflow day, but they have gone now to 2 days in a row with no inflows, which their streak was every single day since the start. Here's the start. IBIT, every single day inflows, every single day inflows. 2 days in a row of outflows. It's not good. And what does it indicate? I mean, it indicates that some of the people who bought in the past 3 months are selling. Now, the thing is, we can tell by price that most of them probably haven't made money on their investment, right? So they're cheating. Sure, they might have bought on the first day, they might have bought down here, they might have bought on the way up here. That's possible. That's kind of like the first 1 month of ETFs. But then everything after that, right, basically since the 28th of February, it's all been in this range, 60 to 73. And I don't know about you, but I get the impression that the people who are selling their BTC now, right, the outflows that are coming, meaning they're getting rid of their ETF shares. I get the impression that they are selling because they're at a loss, right, and they bought at the wrong place, and they don't feel so good about their, frankly, bad decision. I don't think that if someone bought the ETF at 35 or 39, 43, 48, 52, 55, anywhere the way up, I don't think they're selling yet because their Bitcoin investment has shown them a return. So then you have to think about, okay, well, who is it? If it's supposed to be a long-term investor and they're now selling, then that's a sign of emotion, right? They're trying to buy long-term, but they're panicking and selling already. That's actually bullish. ETF investors are not different to any investor. Some are people, some are institutions, some are rich, some are not so rich. Some have billions, some have tens of millions, some have millions. Some have six figures. Some are smart, some are dumb. And some are smart money and some are dumb money. And they're all people. They're emotional. If you bought Bitcoin at 73 and now you're selling it at 64, you're a bottom signal to the market. Right? If you buy high, you know that was the wrong thing. So what happens when you're selling? Do you think these people magically become good traders? If they bought high and they're selling now, are they likely to be selling before it drops another 10k? No. They're probably selling the low as well. So the reason I say this is because the whole ETF thing is going to ramp up and everyone's oh no, everyone's going to get bearish ETFs and bear. And I know that's exactly the type of setup I see where this kind of move happens. Where we actually go up. Why? I can't go up. Of course it can go up. Bitcoin doesn't need good news to go to 70. It doesn't need bad news to go to 60. It's a range. Right? So it can have bad news, ETF outflows, and go to 70. Because it's the range. Remember all of this? There was good news up here. There was some bad news down here. There was some good news here. There was some bad news here. Good, bad, indifferent, everything in between. It's a range. It's consolidation. Why do I say this? Because zoom out. Right? Zoom out. Is this distribution? Is this accumulation? We don't know. We'll know at the end. But if you're looking at a trend, and let's say it's accumulation, and it does this. What does it do? It goes to either side a few times, and then it breaks out. Okay, cool. It has to do this anyway, because that is how it builds energy for the next move. So once a range low and a range high are established, it needs no reason to go there, it needs no reason to go there, it needs no reason to go there, no reason to go there, or no reason to stay in the middle. It's consolidation. It can just consolidate forever. Not forever. It's a bit of hyperbole. What it does need is it needs a strong catalyst to break either side and actually hold that breakout. So to break down or to break out, it needs a reason. Now, reasons don't move the market, just like news doesn't move the market. But things like the positive ETF flows, which are not just news or reasons, it's literal billions of dollars, was enough for Bitcoin to break out from that level and trend up. Right? Similarly, if we actually saw sustained outflows, now I'm not ready to call that yet. I'm not calling this, oh, it's all over, it's all done. I think that's how the sentiment will shift. I don't think that is the case at all. People are like, but it's outflows. 12 billion there, net. That's including absorbing all the grayscale selling, right? So there's been 29 billion into the new 9, right? And then you knock off 17 from grayscale, you've 12 left. So there's 29 billion inside of these. How much came out yesterday? 50, 70, 75, excluding grayscale. 75, right? 75 billion out of, what did I say? 29 billion? So, yes, there can be outflows. No, it's not the end of the world. Yes, some people are short-term buyers, so they're taking profit. Yes, some people are emotional bad traders or bad investors. But they're I'm going to buy at 70 and hold it long term, and now they're panicking and selling because it's gone sideways for a month and it's down. There's everything in between. But the market is up this high partly because people believe the ETFs are a source of demand. That's true. Because they have been a source of demand. Right? Net, even with all these outflow days, even with many outflow days, look on the extreme right here, you'll see the net inflow and outflow. Even with lots of red days along here where there's been outflows, still a $12 billion net demand since they launched about 3 months ago. But if the expectation is that that is gone, well, price can go lower. And it's not going lower because of people's fears. It would be going lower because if people have bought Bitcoin and continue to buy Bitcoin because they believe the ETF flows are, or they not believe, sorry, they see the ETF flows are continuing to be in positive, and then that stops and it reverses and the ETF flows are negative outflows, some people will sell their Bitcoin as well. The reason why ETF flows are important is because they are the barometer for how we act, how many traders act. When you see 217 million of outflows, the mid-brain, low IQ way to interpret that is, oh, the ETFs sold 217 million yesterday. There was 217 million of selling pressure yesterday on Bitcoin. And that's all. No. That's on top of the regular selling. That's on top of miners selling. That's on top of people who bought Bitcoin or longed Bitcoin because of the ETFs, realizing, holy shit, the ETFs are not actually buying that much anymore. I need to sell too. There's going to be a multiplier effect on that. Just like on the way up. Right? On the way up, it wasn't just, oh, there's a $500 million inflow day. Think of how many people were buying. I ran a poll in the chat a few weeks back saying, like, how many of you have bought ETF shares? And it was like, I think it was less than 2% of people. Which makes sense. Most people aren't in the US, right? So they can't even buy these shares. And most people outside of that don't want to buy ETF shares because they understand that it's a vastly inferior way to get Bitcoin. Right? If you want Bitcoin, buy the actual fucking Bitcoin. And I would say if you put that out across the whole crypto space, less than 10% of people have bought the ETF. Less than 10% of people have got their exposure through shares of IBIT or FBTC or whatever. Why does that matter? Because that means 90% of people are buying and selling somewhere else. Somewhere that's not included on this list, right? It's on Binance, it's on Coinbase, it's on, right, exchanges, P2P, whatever. And we know how the market goes. We know psychology, right? Humans are have herd psychology. We follow the crowd. And so when it was all good and it was going up, people would be buying. Now that it's not so good, it's not going up, and there's more outflows than inflows. Just look day by day. In April, right, we've had more outflow days than inflow days, and the outflow days have been a much greater magnitude as well, much more selling than buying. So April has been bad for ETFs, right? And then again, let's zoom out. What does the April monthly candle look like? Oh, it's red. Shock. So this is it. This is what drives the market at the moment. And I noticed that people, it's a thing about like fatigue. I noticed people had stopped talking about ETFs. And that's a very lazy way to behave about your fucking investments, right? About your trades. And it's short-sighted. Because everyone, and it's a sign of a weak mentality as well towards the market. You know, if you're checking funding rates, you check funding rates every day. It's a habit. If you're checking open interest, if you're checking whatever charts you're looking at, you want to look at Bitcoin, you want to look at Ethereum, you want to look at ETH-BTC, you want to look at the majors, you want to look at stablecoin inflows. If you're checking some data points for your process, you check it every day. People have, like, and I see it's so clear. I'm not surprised. Sorry, nothing fucking surprised me about lazy traders. That on Twitter, all you saw for January, February, March was ETF, right? It was all ETF flows. Look at this massive monster flow. It was Larry Fink on TV talking about it. It was the Bloomberg guys bull posting about it. So everyone was all over ETFs when they were bullish. Then price stopped going up. It went sideways. It's down, right? Red April. Some outflows, some inflows, some outflows. But then we have days of outflows, and the price doesn't crash to zero, so people fall into a sense of false security. Because now I see people saying, nothing. It's crickets. What? No one's on fucking Twitter talking about this. The biggest fucking thing that's happened. Literally, this is the biggest day ever in ETFs. When I say ever, that's since the 11th of January, so 3 months. So it sounds very extreme, like I'm clickbaiting. But this is by far the biggest. Why? Look at the outflows across the others. Look at BlackRock with zero. Look at Fidelity with their first ever outflow. Fidelity are the second biggest, only behind BlackRock. The rest don't really matter. It's BlackRock and Fidelity. Fidelity have outflows. BlackRock 2 days flat in a row. I don't see this on my Twitter. People are not talking about it. They're literally burying their head in the sand. No, this is okay. This means nothing. How does it mean nothing? BlackRock had 71 days in a row. It was a 71-day streak of every single day inflows. Now there's 2 days in a row, right? One day could have been just an aberration. 2 days in a row of zero. And then Fidelity, the second biggest, have had an outflow. How is this not important to know? Why is this suddenly this? It's a nothing burger. You're fucking insane. So, and this isn't me bear posting either, by the way. But it does make me short term think, are people ignoring? Like, are they literally ignoring the single most important factor in the market right now, which they were all over in January, February, March, when things were good? And it reminds me of what happens at the top of bull markets. And I don't think it's the top of the bull market. I've been over this. I think local top, sure. I think we can go lower, yes. I think meme coins will bleed out. I think everything will go a bit lower, but then we get some really good re-entry points to get long. And maybe that doesn't happen. Maybe I don't get the nice re-entry I want, but I see it as still being early into the reaccumulation or consolidation phase, right? I've talked with this a bunch. I think we need to set a low, retest the low, spend some time over summer, probably having choppy, shitty price action, and then, boom, away it goes. But there'll be bounces in between, like I showed with Bitcoin. Doesn't mean there won't be bounces, even if I am right. And I might not be right. I'm not always right. But even if I am right, when I say I think it goes lower, most people take that to mean, oh, this is going to happen. No, because that would reward bears too much. Anyone who's directionally betting is going to get chopped up. If you're directionally long on lower time frames, right? People who are directionally long want price to just go straight up. People who are short want it to go straight down. Instead, it chops. This is just the first part of that chop phase, right? People got too aggressive into the lows. It's had this first bounce. Now they're like, oh, is it back? No, it's going to drift. It might go up first. It might go down first. But it's going to just chop anything in here. If it's not 66 and it's not 60, it can be just brutal. Just this, up, down, directions. Noise. And then eventually price will pick a side. Up or down. We don't know. So it reminds me of what happens at the top of bull markets. So I think it's local top, yes. Not cycle top, no. But people get complacent. And this is pure complacency. Maybe I'm wrong. But tell me if have you seen a lot of coverage of the last few days of ETFs? Which have been the most interesting, right? Especially the last 2 days. 2 days of zero for BlackRock and now outflows across the big ones. When people stop taking note or account of whatever data it is, whatever analysis it is, whatever method they use to analyze the bullish bearish trend, that's complacency. It's not even complacency like, oh, it'll be fine, it's going to come back, I'm making so much money. It's burying your head in the sand. It's like complacency driven by fear. It's like they are scared that things are not good. And instead of saying, well, maybe I should consider when I'm wrong on my idea of Bitcoin going to the fucking moon, they just say, oh, forget about it. And when you ignore red flags, it tends to come back and bite you. So, that's it. GM. Probably enough of a rant for this morning. GM. I'll look through some alts on Trade of the Day. And I'll see you all later. Live stream later. It's going to be altcoin requests part 2. As yesterday turned into just a rant. Multiple rants. See you then.